Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, May 18th. We got a couple economic news releases to go over today, and of course, we got the weekly jobless claims that comes out every Thursday. So last week we had 236,000 people apply for unemployment. Forecast for this week was supposed to go up to 240,000 people for applying for unemployment, and it dipped actually down to 232,000 people. So good numbers overall right there. We also got the Philly Fed Index. This is the manufacturing number in the Philadelphia region. So previous reading was at 22, and this reading jumped up to 38.8. So earlier this week, I think it was Monday, we had the New York region where actually had a contraction, where it actually went negative, where Philadelphia has a positive. So that's good news right there because it looked at previously. So great overall data coming out of Philadelphia. Last but not least, we got the leading indicators in the month of April. So back in March, we had a 0.5% increase for leading indicators, and then for the month of April, it shows 0.3%. This is kind of gives us a little bit of a forecast, what it's indicating as to where the economy is moving in the near future. So it's kind of looking more of a forecast, kind of your crystal ball, so to speak, of where things are going to be moving, and still looking pretty good for leading indicators. So overall, good day for economic news releases. So let's take a look here at the headline news, and right now the stock market is up, especially after the beating it took yesterday. Yesterday, don't be concerned about that. Don't be fooled by these headlines here, because yesterday's was basically all in speculation. Just like the stock market was going up based because when Trump won the election, that they had all this grandeur view of all this money being spent going on to the economy, the infrastructure, and everything else, and tax cuts and everything else. And none of that's happened as of yet. There's no criticism of Trump, because obviously it takes he's one person in the cog, where we need Congress and everybody else to kind of step in there and kind of start putting these things to action. But right now it's just all speculation. All the turmoil that's going on right now with a lot of uncertainty is kind of spooking the investors. This is kind of like anything that you see with the emotion based, very temporary. This could quickly change after 1 hour to maybe next day to a week, whatever. But the economic data kind of supports the data going, where the market's going right now. The market's showing a lot of improvement, and it's improving. And so the big blip yesterday could easily be corrected. And sometimes that's pretty healthy. We have those type of days, primarily because we need to sell off, and it gets too expensive for people to buy in now. Now that the prices come down, they can buy in at a lower price and such. So this could be a little healthy. Today we're also being helped a little bit by the tech sector. So the market could be doing a little bit better, but because it's still in the back of their minds with this turmoil going on in Washington, it's just not really taking off a lot. It's only up like the Dow, and I think it was on S&P are only up about 30 right now. But right now, like the big three, Facebook, Amazon, and Apple are all up like over 1%, doing real well. So that's kind of where the market's kind of taking its cue today. So let's see how this is affecting the bond market. So as you saw, the bond market did real well yesterday. It went up 51 basis points. Now, today it started right up here, so we started higher. But since then, we've, as you see, these little wicks here on these candlesticks here, we were up even higher, we pulled back. We even were down lower, we pulled back. So right now, we're kind of even where we left off yesterday. We're about basically zero. So pricing will be about the same. If they didn't do any price improvements yesterday, you'll probably see some slightly better pricing today in that case. So it will be basically to no difference from yesterday to slightly better, depending on the investor and stuff. Sometimes they're a little slow in getting improvements. They want to be more of a conservative approach and such. So this is kind of where we're at right now. So good, still pretty good news. We're above the second resistance level here. How long? I don't know. I would urge to be cautious here. If you're floating some interest rates on a refinance or purchase, you may want to lock in here, because typically when we reach this range, we get knocked back down. And right now, the fundamentals really support where we should be at. And this, to me, is more of a temporary solution. So I don't see us really going much up further than where we are now. You might as well just cash in on your gains right now. All right. So anyways, if you guys want to have more updates throughout the day, just come over to Twitter. I'm at Mike Bjork on Twitter. I do post updates throughout the day. And If you guys are also looking to buy or refinance, I'm a loan officer myself, so I can help you with the purchase or with pre-approvals to helping you with your refinance, from rate and terms to taking money out of the equity called cash out refinances. I can help you with those as well. Just please feel free to reach out. You guys have a great day. Thanks so much for watching. We'll see you guys tomorrow. Bye-bye.